Did you know that having this many shares of Tesla stock will allow you to retire on the stock in 2025? It's no secret that many individuals are considering Tesla as a way to retire early. To find out how, be sure to keep watching and listening. Nobody can truly resist the chance to retire early, and many people think Tesla will enable them to do just that. Investors continue to have high hopes for the top electric vehicle firm, notwithstanding its recent stock market performance. You can discover out how many shares of Tesla stock you'll need to retire on by 2025 in today's video. As of the final quarter of 2021, Tesla's market capitalization has risen to over $1.2 trillion, with its shares having gained over 50%. In spite of a few bumps lately, a dollar. Based on CNBC projections, a $1,000 investment made in November 2020 would only be worth $2,940 after a year, a 193% return. Thus, you would have almost tripled your investment if you had bought Tesla stock in the aforementioned year, when it was only little over $400 per share. If you could have gone back a few more years, your return would have been much higher. As of November 2, 2016, the price of a Tesla share was approximately $38. Thus, in 2021 alone, a $1,000 investment would have increased by 3,025% to be worth about $31,286. The S&P 500 index would have returned 142.4% during the same time period. Over the course of those 10 years, you would have received a five-figure return if you had invested in Tesla in 2011. Tesla now sells the Models S, 3, X, and Y in addition to the Roadster. In addition, it unveiled the Cybertruck and Tesla Semi, though it hasn't said when those cars will go on sale. Given that the price of Tesla's shares has risen from $5.74 to $1,229 over time, a $1,000 investment made in the company in November 2011 would be worth almost $204,000 today. That is a return of more than 20,000%. If you had made a comparable investment in the S&P 500, your return would have been 357.4%. Naturally, this does not imply that investing in the S&P 500 is a bad idea. It's actually the ideal location for most people to invest. Tesla has recorded a rise in both vehicle production and delivery throughout the last 24 months. After delivering 108,600 vehicles, it even outperformed predictions made by consensus. There is a clear demand for these cars, as seen by the rising number of orders and corresponding deliveries. The stock price of the top electric vehicle firm is anticipated to rise in response to the growth in sales. If that occurs, the price of Tesla's shares will rise in tandem, and by 2027, there might be a significant profit that would enable investors to take their money and retire comfortably. How do you feel about purchasing Tesla stock? Leave a comment below with your opinions if you haven't already. To say that he does not look forward to retirement would be hypocritical. Still, a relatively small percentage genuinely attempt to maintain their financial stability after retirement. Most people are unaware that they need proven financial support from successful investments in order to remain financially comfortable after retirement, and investing in growth companies could pay off. In the event that they made an investment in a high-value firm with strong growth prospects, how many shares will you need when you retire in a few years? An average person requires almost $1.7 million to retire and maintain their standard of living, according to a poll. You will need to own 850 shares by now in order to retire by 2027, assuming that the price of Tesla stock hovers around $2,000 at that time. That amounts to almost $600,000. Investors can only hope that Tesla lives up to its lofty expectations, given the present price of the shares. It's clear that the electric vehicle firm is making every effort to win over investors and detractors alike. Actually, Tesla has a ton of creative ideas planned. Among these is Tesla's strategy to produce a sports car, use the proceeds to produce an affordable vehicle, and then utilize those proceeds to produce an even more affordable vehicle. They also intend to offer choices for producing electricity with no emissions. Additionally, Tesla intends to evolve into a data and AI firm. After all, Elon has declared time and time again that Tesla would be perceived primarily as an artificial intelligence startup. The company has been concentrating on finding solutions for real-world AI, and on AI Day, it unveiled the Optimus humanoid robot. Furthermore, ARK Invest states that 60% of projected value and more than half of projected EBITDA, profits before interest, taxes, depreciation, and amortization in 2026 will come from Tesla's potential robotaxi business line, making it a significant driver. Although at much lower margins than the robotaxi revenue, they project that electric vehicles would account for 57% of the company's revenue across the simulation set in 2026. Given its performance despite the decline, it seems that Tesla, an electric vehicle firm, will maintain its strong performance. By this point, the company has arguably established itself in the sector. Because of this, Tesla might end up being a wise retirement option in the not-too-distant future. Many Tesla bulls hope to retire wealthy as devoted Tesla shareholders and support the company's vision of a cleaner, greener Earth. In order to live well in a Western nation like the United States during retirement, one must have at least $4,100 a month, as the median retirement income in the United States is approximately $47,500, according to annuity.org. Now you might have far less money when you retire if you reside abroad or want to do so. A lot of Americans decide to take advantage of arbitrage and extend their retirement funds by moving to other countries such as Thailand, Portugal, Costa Rica, Mexico, and Panama. If, on the other hand, you would rather stay in your present nation and would like to retire by 2030 with a comfortable income of at least $4,000. In order to account for inflation, the minimum required amount should be raised to approximately $50,000. Applying a typical withdrawal rate of 5%, to create $50,000 a year in retirement income, you will need to have at least $1 million. Your money will last you 20 years assuming you continue to spend 5% of your retirement savings and you receive no further income after you stop working. The good news is that your money will last for a very long time, because Tesla shares will increase in value over time if the company continues to perform well. If investors wish to retire by 2030, buying Tesla stock is likely the best option available right now. According to Adam Jonas, the business has won the race for electric vehicles. According to him, Tesla is leading the electric vehicle race as it currently exists. The EV race can be compared to a marathon. At mile 21, Tesla is leading. The other competitors are either at mile 2 or are still fastening their shoes. For more information on Tesla stocks, view our other videos.